Yeah, I ain't no slouch. I ain't no punk.
Ain't no. All right.
Ain't
So
no.
Al ain't no punk. We got to get into this show. We talk every week like there's a big audience, and usually none of this gets seen by anybody.
No, but people are clamoring for more, right? They're knocking at the door. They're hammering at the door. There's a line. You know what I mean? Out the door and around the
Yeah.
corner. People are wanting more. And we're just, we're kind of, we have a trickle of content, drops of content.
Mm-hmm. Has
We got to
nothing to do with the fact.
turn that faucet on.
Um. Okay. So as always, as people may be getting accustomed to, all the people that don't listen are getting accustomed to our schedule, our fucking schedule of things that we talk about.
Schedule.
So the first segment, as always, Friday, weeks wrapping up. Things have been crazy. Rates are up, rates are down. Where are rates going out? What's your rate? Is the segment.
The walls are closing in, wheels are falling off, everything's on fire.
Mm.
You know what I
Is that
mean?
what they would? Yeah, that's what I mean. Come on, that's what
That's what
they
they'd
would.
have you believe, right?
Yeah,
But those of
it's
us that
just
are in the business, we know it's got to turn.
it's just
It's going to turn.
it's
You got to have
well,
faith.
it's more of the same. Rates are about 7, whatever. We're not going to talk about that today.
No,
But I thought,
you got to have a friend that you could chit chat with on a hit show on social media in order to get through these tough times.
and to act like scratch that creative itch and to act like you have some self worth.
I'm worth
That's
it.
what this is all about.
100%.
So the what's your rate today? We're not going to talk about. Don't need to talk about interest rates. They're the same as they've been the last month or whatever. But what I wanted to talk about real quick is just to give people an idea of like what interest rates. How do you find what your interest rate is? Well, depending on what lender you go to, depending on your qualifying factors like credit score, down payment, your specific loan, you're going to have a whole plethora of rates. Rates are on a spectrum. You've got very high rates that you have and very low rates that you have. Somewhere in the middle of that spectrum is going to be your qualifying rate or what we call par rate that doesn't come with a cost. If you go, if you want a rate lower than your par rate, you're going to pay points, added cost for that rate. If you take a rate higher on the spectrum than your qualifying rate, then you're going to get lender credits. Um, so, people are out there, they're quoting rates. Who knows? You got to ask, does that rate come with points or talk to a loan officer? Better yet, talk to somebody and come up with a strategy.
Right.
So, Al, my question for you about all of this is what is the strategy for paying points? Is it wise to pay points? What do you think?
It's a great point. Right now, I don't think it's wise to pay points, right? Get yourself down from a 7.25 to a 6.875. Just don't make no sense,
Yeah,
right?
right.
Why pay the points? Why pay the money? Right? You're not getting that much lower, and you're going to end up refinancing this thing anyway down the road. So, doesn't make sense to pay the points right now. If anything, if you have if you have the availability, which most people don't right now because of where rates are, you want to pay, you want to try to get a lender credit to eliminate some of the costs. Take a little bit higher interest rate that you're going to have for a year, right? And these things are down. If they're down a year from now in the fives, then you made out like a bandit, right? Then you can refinance, get yourself a lower interest rate. You didn't spend as much money up front because you got a lender credit, which is essentially the lender giving you money towards the cost of the loan for taking a higher interest rate. So right now it doesn't make sense to try to buy your interest rate down just so you feel a little bit better about being under 7%, so you can chit chat about it at the cookout, right?
Right.
At this point, take your medicine, stick with where you're at, right? Take your interest rate. It's not going to be great, but you can survive it. And when the time comes, you refinance it, get a lower interest rate, and that's where you'll be able to drop that payment a little bit. But don't spend the money now. Doesn't make
Right.
sense.
It doesn't make sense to save 50 or $100. It doesn't make sense to pay if you're buying a $400,000 house and it's a point buy down $4,000 to save $50. You're not going to be in that loan long enough to recoup that upfront investment. You're going to
No.
most likely refinance before that time. So take the higher rate. Um, like you said, take your medicine and then just plan on refining. And then you know what? If you still have questions, and you're in the process, bring this up to your loan officer. And if they're unable to answer these questions or guide you, you're working with the wrong people.
Right. Yeah. I mean, the thing is, there's most people out there, no, at least nobody that I know is working commissions off of points and fees, right?
Doesn't
People just want to
exist.
do the loan or not do the loan. So if you're working with somebody who's trying to sell you into a higher cost loan, right, then that's not the right person for you. Right. That doesn't make any sense. People should, your loan officer should be your advocate, try to help you navigate, the shaky, the choppy waters, right, to get you in the home and get you in a somewhat comfortable position right now so you can make the best decision down the line, right? So, yeah, I 100% agree right now. It just doesn't make sense to try to buy it down. Take what you get, enjoy what you get until you can get the hell out.
Yeah. All right. I like my seats. I paid for my seats.
Pay for my seats. I like my seats.
All right. So we're gonna move on. We're trying to get this quicker, trying to get it down to 20, 30
It's a
minutes
process. It's a
max.
process. It's a process.
Let's do it. All right. So our next segment is niche.
Neeesh.
Maybe it's a product that you haven't heard of. Maybe it's a product that you have heard of, but you need to be reminded of it. Um, so, what's the niche this week, Al?
Ooh, it's a good one. It's a renovation loan, 203K renovation loan, right? It's an FHA. It's an FHA program, okay? Government program that's going to help you. You can buy a home that maybe needs a fixer upper, right? Needs some repairs, not the way you want it right now, but maybe a renovation of the kitchen, some bathrooms, um, some flooring, what have you, little siding, little paint, right? Little scrape and paint. You can get this loan. You could buy the house, get yourself some extra money that you could put back into the house, right? To do the renovations that you want to get it the way you want it to be. Yeah, build up a little equity as you buy the house. It's a great opportunity for the people because right now everybody's, most people are looking for their move-in ready house, and to be completely honest, it's slim pickings out there. So, take something that might be a little bit of a fixer upper. It's not, it's got good bones. You want something with some good bones to it, right?
Yeah, you
That
don't
you
want
can
to put
kind of,
lipstick on a pig.
no, we ain't trying to do that. But something that you can make it your own, right? You can
Right.
put your little flair on it. So,
So the way that the
um,
203K works, like to be completely concise as possible, the way that a 203K works is you're funding the price of acquiring, or you're funding the cost of acquiring the property plus renovating the property.
mm-hmm,
Um, uh, it's great, like you said, for houses that need work, maybe even a house that doesn't qualify for FHA unless there's these upgrades. So you acquire the property for the purchase price, and then you're putting, let's say, 50 grand into it. Um, say the purchase price is 200, you're putting 50 into it. Your loan is going to be based off of 250,000. Your down payment's going to be based off the 250,000 and all of that.
mm-hmm,
So there's one thing to note without getting too wordy. $35,000 and below is a streamline FHA 203K. So
mm-hmm.
if the work is going to cost that, then it's a one-time close. If it's over that, the loan closes and then money is put into a draw schedule and dispersed as
Right.
work is done. Um, let's see.
That way your contractor can't take you for all you're worth. Take your money and
Right.
run.
And so what's going to happen within the loan program, within the processing and underwriting, you're going to get a FHA 203K appraisal. So you'll get a bid for the work. You'll give that bid to an appraiser. The appraiser is going to appraise the home based on that work being done, and they will give that home a subject to completion of work value. And then right, and then once the work's done, they'll go back out and confirm and make that a as is value.
Mm-hmm.
So
Yeah.
there's a lot to it. I mean, we could spend a whole podcast or show talking just about it, but yeah, it's a good product. We definitely have that available to us, and it is a good time to use that.
Yeah, it's a great time,
Slim pickings.
especially low inventory. Get yourself a decent house, make it the way you want it instead of buying somebody else's dream.
Right. All right. So the next segment. What's our next segment now?
Hot takes.
Is it hot takes? I guess it is hot takes.
Hold up. What is that? Do you smell something?
No,
You smell something burning? Hot takes. It's hot takes.
It's hot. Oh, it's our hot takes burning.
It's hot takes. Yeah. Hot takes.
It's not your golf score burning up the scorecard, is it?
No, certainly
Is
isn't.
it you burning up the scorecard to like never
It could
show
be.
anybody?
It could be. Could be me burning a hole in this seat from squirming and worming.
So, our hot takes. I don't know. Do you have a hot take this week?
I got a hot take. I got a hot take. You don't have a hot take.
You're the one that doesn't have a hot take.
I got a hot take.
All right, well, let's hear it.
All right, hot take. Hot off the press take. Everybody's in the same position that you are right now, right? Low inventory, rates are higher than where people want them to be, right? So you have all these people waiting around for things to get better to pounce on their opportunity and buy their house. Do not wait to find out what you need to purchase your house, to get pre-approved, how much money you need to save, what your credit score needs to be, what you want your ideal payment to be, all that good stuff, what kind of programs are available. If you wait until the market gets to the point where you want it to be, you're already missing the boat, right? You're going to miss out on a ton of opportunities, a ton of houses that you wanted to purchase because you're not ready, right? Have those conversations now, whether you're 6 months, a year and a half out, have those conversations with your loan officer now so that you are positioned the right way for the feeding frenzy, because there's going to be blood in the water and there's going to be sharks circling. You know what I mean? And that's for all you Baltimore folk out there. That's for all you Baltimore folk out there that know what I'm talking about, right?
Yeah.
You're gonna want to bite of that. You're right. You're gonna want to jump in on that when the time's good. You're gonna want to bite of it. So
Yeah.
that's
You don't
my
want a
hot
house
take.
to pop up. You don't want a house to pop up into the zone that you're looking down there, Pulaski Highway, and end up like a steamed crab.
Right? You don't want to be out there with the rest of the crabs, trying to be bottom feeders, trying to take what's left, right? You want to be up there getting the good stuff. That's what I'm talking about. So,
Yeah. So I think to wrap up your hot take, I think what you're trying to tell us is don't get ready, stay ready.
Stay ready. And I don't like when nobody puts words in my mouth because I like to say my own kind of stuff, but I'll take that, right? I'll run with that. That's a good way to say it. Say it.
Nice. All right. Very good hot take.
Hot take.
That was hot. And the delivery, it was pretty hot delivery. I like it.
I felt pretty good about it.
All right. So my hot take of the week is we needed interest rates to go up.
Mm-hmm.
Stinks that they're up. Nobody likes it. They needed to go up. 2% was great, but it wasn't doing the market any favors. It was insanity. If rates are still 2%, home values would be off the charts. They already were off the charts. And
just getting ridden up, yeah.
That market that we were in when rates were at their lowest was not healthy. People were doing crazy stuff. I saw the craziest thing that I saw people do was they would agree the purchase price would get driven up 50, 60, $70,000, and then they would buyers were agreeing to bring cash to the table to fill in the gap between appraised value and purchase price. So definitely not why. I'm not going to say not wise. If people wanted the house, and
if you're going to get the house of your dreams and you're going to be there for the rest of your life, yeah, that's fine. But if you're trying to buy a property that you're going to sell in the next 5 years, no, not a great idea, right?
Right.
You're going to sell for exactly the same amount, right? Unless you bought at the perfect time where this market shoots through the roof.
And so hot take. I think we needed rates to go up. I think it's a good thing in the long run that rates went up. And as much as I don't like it being in the business, I wish that we were busier because rates were lower. But I think that it was necessary, and it's in the long run, it'll have been a good thing. So that's my hot take.
I agree. Controversial hot take for those in the business, right?
Mm-hmm.
You've been saying this since 2021. You're like, they got to go up. They got to go up to be able to sustain business. You've been telling me this. And I said, no, Ab, I don't want them to go up. Right? And you were right.
Well, we'll see when they come.
And you were right. Yeah.
Yeah.
Or you're the son of a bitch that wished away my good years. So We'll
All
see how it
right.
goes. We'll see how it plays out.
We're going to move on to the next segment, okay? Next segment is classic. This is a
Mm,
classic for us.
it's
Um,
classic. Yeah,
people,
everybody loves it.
everybody knows this for this one.
People go nuts about this next segment here.
Uh-huh.
They've
Uh-huh.
been, people actually tune in right about now on the show just to hear this next piece.
Right. It's and we're so like chatty Cathy that you don't know it. This could be 10 minutes in. This could be 30 minutes in. So
You have no idea.
it's by design. Our
Uh
next
huh.
segment is opinionated.
Couple
So
things we want to say.
this week, Al's on vacation. He golfed today. I don't think he has an article. Do you have an article? You don't have an article.
It's not because I didn't want to have an article. It's just because I wanted to spend more time on your article. Okay, it has nothing to do with me not being prepared for the show.
Okay, so
And-
the first thing we're gonna do is I'm gonna read a headline to you since you didn't prepare one, and you're gonna have to just tell me what you think of it.
it's backfired. Try to do the right thing. Are you going to find a headline or do you already have one pulled up?
No, I have it. All right, so it's white woman gives birth to black baby, blames husband, calls him a cheater. What is the headline? What do you think of that headline?
We got a power outage.
The Nation. I don't know if the Nation is like a credible source, but this is a headline, and a quote in here. The doctor says, from the woman's point of view, doctor says, it's impossible, but I did see him talking to a black lady. Give us your thoughts, Al.
I'm
What
gonna
is your
swim away. I opt out. I opt out. My opinion is I have no opinion. I don't want an opinion. I opt out. I choose not to. Can you give me? Is there another article that you can throw out there that I would love to give my opinion on?
Oh my God, you're so difficult. Don't
I
be
mean,
prepared. Okay, here's another article headline. Trapeze artist with diarrhea poops all over crowd.
okay. Now this is a classic case of wrong place, wrong time, and I'm not going to say for who because if you're a trapeze artist, right? Should you be going to the McDonald's and getting yourself a McDouble with mac sauce before you head up there on the lines, right? And go squirting around in a floating
Squirting
around,
around.
go flirting around, squirting around in a singlet, which is what Abby used to wear a lot of times in high school. No, I don't think that's what you do. Right now, if you're in the crowd and you got the kids out there and you just get popped in the face with a little overspray, that's just wrong place, wrong time. Right?
Yeah.
I don't think there's much you can do to kind of prepare for that. But
And I'm sure there's no like front row will get wet ponchos handed out at a trapeze show.
no. Or front row will get shat on, right? Is what the sign should say. But no, yeah, that's just a tough position to be in. You feel bad for everybody involved, right? How embarrassing this must be for the trapeze artist. I mean, the guy's all world, right? He's one of the best around. He's up there doing his thing, and he probably had bubble guts going into it. He's like, should I do it? Should I not do it? Should I do it? Should I? The hell with it. I got it. The show must go on. The show must go on. So this guy's committed to his craft, right? It's just, maybe make some fine tune that diet a little bit, I guess.
Okay, yep. All right. Well done, sir. Well done. Okay. So for my article, for my opinionated, can you see this?
Are you showing this?
Yeah, so you see
Mm-hmm.
this?
Yeah, I see
All
that.
right, so my article is about the UPS drivers. So the headline reads: UPS says drivers to make 170,000 in pay and benefits after union deal. Um, so by the end of the contract, full-time UPS drivers will make an average of $49 per hour, which comes out to $102,000 a year. So we'll stop there, and I'll talk about it a little bit. So in classic fashion, the headline isn't, headlines, 170,000. I don't know how many of the drivers are going to make that. If in the article it explains that it's $49 an hour, which 40 hours a week, 52 weeks a year, blah blah blah. It's about 100 grand, which is amazing.
It's a great living.
And good for them. So when I saw this, I thought good for the drivers and good
Yeah.
for a group of people coming together, non-violent, protesting. I think it was like some 300,000 drivers were going to protest, and that's a big deal. And they were able to get
Yeah.
their voices heard. So my takeaway is, wow. Well, my couple takes away. One, good for the drivers. If you get together and you have a just cause and you fight for it, you can get what you want within reason. That take note of that. The second thing is, how much money is UPS making? That they're just, yeah, sure, 100 grand a
Yeah.
year to.
Absolutely.
It's
To
like,
drive around. Yeah. Well, okay.
or
Well, let me ask you something there, pal. Can you imagine driving around in the wintertime with no doors on? Huh? Imagine how
that's
it's
not
got to
my
be a little
point.
rough.
They
It's got to be a
deserve
little
it.
rough.
I'm not saying they don't deserve it. I'm saying that UPS must just have a lot of money. These big corporations are making, maybe they don't need to make so much and they can pay people a little bit better. Maybe that
Yeah.
be
That's a
the
great
truth
point.
everywhere.
That's a great point. That's a great point.
Um,
Right.
or are they just going to put all of that added cost on the customers and it's going to cost 10% more every time you buy or ship anything?
It's a surprising take, great take, because you're a big don't deserve it guy. You love telling people they don't deserve it. So this is good coming from you. I love that.
Mm-hmm.
You
Yep.
know.
Yeah, I think people
Um,
that work hard and get things, they deserve it.
absolutely. Who doesn't deserve it? Let's not get into that. Another show.
All right, so we're gonna move on. We're cruising. We're 2 minutes over past schedule, so that's not necessarily what you want. But I'm gonna go and I'm gonna give us some facts, and then we'll be out of here.
Straight facts. This is good. This is good. This is good. We're popping. We're beat bopping along.
Straight facts, no printer.
No printer, homie.
Okay. 91% of mortgage holders have a rate lower than 6%. It's tough. Tough to
Yeah.
motivate people to sell and or buy knowing that or
Yeah.
refinance.
Great stat for a show that's all built around trying to get more mortgage business. Love that.
42% of primary residences are owned free and clear, no mortgage.
That's wild. That's
Crazy.
wild.
It's a
That's
lot.
setting yourself up for success right there. Right.
It's a lot.
Mm-hmm.
And I don't know what the percentage is, but I bet you like it's like 90% of those people that own it free and clear are like baby boomers. Um, Here was one. Average home equity is down just 0.7% year over year, which is I think is important to note because things values did get so crazy high
Mm-hmm.
that
Yeah.
for the last year we've been hearing market correction, market crash, housing
Yeah.
bubble, and it just hasn't happened. Housing prices have sustained, so that's a good thing.
That's a great
Um,
thing. Yeah. You would definitely would have thought that as high as values went and how quickly they got, I mean, they were just getting bid up because of low interest rates and, lower inventory and a lot of buyers that, were bidding on homes that you would think that it would have shot up and then there'd be a bubble and it would have crashed. But no, I mean, it's pretty steady, right? And if you look at the history, with the exception of a couple small blips, I mean, it's been a steady increase in terms of home value, right? So you got to anticipate that's going to keep going.
yeah, it's
You
like
know, yeah. It's kind of comes down a little bit, but keeps. I mean, it's trending up. So, and obviously everything else has to go along with that. Now, the crazy thing that goes along with that stat is you would think that um, household incomes would match that, right? Because that's pretty, as far as cost of living and things go, what your home, what you're paying for a home and the amount that you're gonna have to pay on your mortgage would kind of match how much, income amounts are going up. But income is going up, right? Household income is going up, but it's a lot more, it's definitely not near the trajectory that values have gone up in terms of homes. So
yeah,
pretty interesting.
maybe there's a little
Pretty
bit of a
interesting.
lag on that uh,
Yeah.
between the two. Um, all right, cool. And that's a really good point.
Mm-hmm.
It just that point. It's like that's the big problem. Affordability rates are up, values are up, income's not
Right.
like up as
Right.
fast.
Income's not matching it, right? So, that's the tough part. And that's the other thing too, is that you have some maybe the older generations that are like, well, I bought my first home when I was 22 years old, right? Well, it's like, yeah, but I mean, it costs you $20,000 to buy your house right now. It costs what, 400, 450 to buy a house. So, a little different. Times are different.
It is a little
But that's why we
different.
have all these wonderful products to help you get into a home.
Yeah. It's a great time to buy or sell.
Great.
All right. 86% of home buyers use a real estate agent. Thought that
Uh-huh.
was, 86%. Good for that 14%. Hold strong.
The term OMG can be tracked back. Usage can be tracked back to 1917.
People
So you
were
got
just
guys
walking around saying OMG.
World War I, you're in the trenches and you're writing a letter home, and then poof, bomb goes off. You're like, OMG, Tom just got blown up. Right?
Wow, man.
You know what I'm saying? OMGs.
Yeah.
People have been saying OMG. OMG, I just saw a rat crawl across my leg. Trenches,
Okay, with the
1917.
trenches, easy on the trenches.
OMG, the Titanic sank. I don't know if it was 1917, but it's thereabouts, right? We're somewhere in that window.
OMG, I met this chick last night at the speakeasy. I think she's a total flapper.
Uh-huh.
She's a flapper.
What is a flapper? And why do you think they're calling her a chick? Dame? Maybe?
Yeah.
OMG, I met this dame. And she's a flapper.
She's a flapper. If you know what I mean.
I have no idea what you mean. No cap on God. I wonder if that was in there too.
No, it wasn't, because this is stupid. All right. In 1776, the first mortgage was issued in St. Louis. So, I don't know. The goal of the fucking arches, St. Louis, the gateway to the Midwest.
Mm-hmm.
First mortgage was written. So.
Gateway to the mortgage. That's where it came from. Gateway to a home. St. Louis.
Yeah. So that does it for this week's show. Our guest I talked to him like an hour ago.
This show brought to you by the fine folks at North Furnishings, by the way, which is helmed. The man at the wheel, Patrick North. What a guy. Just top notch. Everything that you hope you can get as far as customer service and satisfaction. He's going to go above and beyond. He'll have it shipped to you, and he'll do it all with a smile on his face. So hats off to the fine folks at North Furnishings.
Pat was going to be our guest this afternoon, but he is in the shop, manning the shop by himself. So maybe a customer came in or something happened.
The guy is just swamped. He is just, as soon as couches, ottomans, love seats, dining room tables, kitchen sets come in, they're out the door, right? I mean, this is very similar to Joe Tamarchio and Mr. Tire on the rim, out the door. Couches coming in, out the door, right? On the showroom floor, out the door. So, yeah. North Furnishings.
He's running the social media. He's driving the van. He's loading stuff up. He's negotiating deals. The art of the deal was actually about him selling tufted couches.
Mm-hmm. This is very true. I mean, this guy wears a lot of hats, which makes sense because his head is gigantic. So it takes a lot of hats to cover it. So.
It does. So we wish he could join us. We'll have him sometime soon. But
hopefully next show.
Let's cut this thing. Let's shut this thing down. We'll be under half an hour for the first time.
This is great. First time ever. Hey, great show. We're excited to see you guys next week. Tune in.
All right. Bye-bye.